آخر حاجة يا شباب هناخدها في السكشن ده analysis. Equity ratios are usually used to evaluate a firm profitability and long-term solvency. شباب انتوا خدتوا في الشابتر ده 3 ratios. Number 1 return on common share equity. Return on common share equity equal net income minus preference dividends divided average ordinary shareholders equity. Return on common share equity show how many dollars of net income the company earned for each dollar invested by the owners. The higher the ratio, the better you are as a shareholder. For example, X Corporation had net income of $720,000, declared and paid preference dividends of $108,000, and average ordinary shareholders' equity of $5,100,000. طب يا شباب احنا عايزين هنا نعمل ايه؟ عايزين نعمل computation للreturn on common share equity. اتفقنا يا شباب ان return on common share equity equal net income minus preference dividends divided average ordinary shareholders equity equal $720,000 minus $108,000 divided by $5,100,000 equal 12%. احنا اتفقنا ان ال 12% represent how many dollar of net income the companies earned for each dollar invested by the owner. The higher the ratio, the better you are as a common stockholders. Number 2, payout ratio. Payout ratio measures the percentage of company's earnings that is distributed to ordinary shareholders via dividends. This ratio is computed as follows. Payout ratio equal cash dividends divided by net income minus preference dividends. For example, X Corporation has cash dividends of $200,000, net income $1 million, and no preferred stocks outstandings. Payout ratio equal cash dividends divided by net income minus preference dividends equal $200,000 divided by $1 million equal 20%. Since payout ratio equal 20%, retention ratio equal 80%. This means for every dollar they earn, they distribute or pay out 20 cents as dividends and keep 80 cents. Number 3 يا شباب آخر حاجة البوك value per share ratio. The ratio is used as a basis for evaluating net worth per share. It represents the value each share would receive if the corporation were liquidated on the basis of amounts reported on balance sheet. The book value per share يا شباب equal common stock shareholders equity divided by outstanding common stock shares. طب يا شباب المفروض انتوا عارفين ان ال shareholders equity equal net assets equal assets minus liabilities. Common stock shareholders equity equal total shareholders equity minus any value related to preferred stock. When we compute book value per share, we must deduct anything belong to preferred stock. The higher the book value, the better the shareholders are. Book value based on historical data, not market value. ده معناها ان البوك value بيعتمد على الهيستوريكال داتا اللي هي البيانات الهيستوريكال اللي already recorded في البوكس عندي في الدفاتر والسجلات not market value. For example, the following information relates to the stockholders equity section of H Corporation, shareholders equity section, preferred stock $3 million, common stock $8 million, additional paid in capital common stock $2 million, returned earnings $2,500,000, total stockholders equity $15,500,000. required compute the book value per share. solution. طب احنا اتفقنا ان البوك value per share equal common stock shareholders equity divided outstanding common stock shares. طب يا شباب ال common stock shareholders equity equal ايه يا شباب؟ total shareholders equity minus any value related to preferred stock. طب يا شباب احنا في البروبلم فوق في الجافن مديني total shareholders equity equal كام؟ $15,500,000 minus any value related to preferred stock. يبقى هو هنا ال value related to preferred stock هي كام؟ $3 million اللي هي البار value. تمام. هعمل $15,500,000 minus $3 million divided outstanding common stock shares. اداني في الجافن فوق يا شباب كام؟ 400,000 shares. يطلع عندي البوك value per share كام يا شباب؟ $31.25 per share.